Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and we're going to run through a few of the week's biggest stories in the mining industry. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and of course, leave us a comment below. Let's get into it.
It was a week of downward momentum for the gold price, which fell from above $4,800 per ounce early in the period to less than $4,700. Silver also trended lower, pulling back after last week's higher levels. Both precious metals continued to react to news about the Iran war, with the extension of the US-Iran ceasefire providing momentum midway through the week. However, since then, turmoil has increased, with tensions ramping up in the Strait of Hormuz. I heard this week from Feneck of Feneck Consulting, who said that while it's tough to see gold and silver prices fall, it's not surprising given the circumstances. Here's how he explained it.
Now it's been 7 weeks of pain. Has that been something that you did, that I did, that investors did? No, it's the war. I mean, look at the price action. It's telling you that the sell-off was generated March 3rd, which was a Tuesday, by just a lot of margin calls, and people are too leveraged out there. So that's what we call an unwinding of that type of position, Charlotte, where people need to sell because they're losing money in other parts of the market and they need to cover those positions, right? So
John noted that gold and silver stocks have suffered as well, but encouraged investors to take the time to review whether the thesis has actually changed for their holdings.
So I just would tell investors, hang in there. You have to fact check yourself, take the weekends, and spend a few hours going through your holdings, doing homework on, hey, has this thesis changed with this stock, right? Like, what's happened from March 3rd to now? Not much, probably, with that stock, right? It's just getting tossed around because of the volatility.
Stepping back to look at the broader market, I also heard this week from independent macro strategist Tom Bradshaw, who said he's identified an indicator involving gold and oil that's flashing a warning sign for the US economy.
Basically, I've got this indicator which is which I found a few weeks back, and actually this looks at gold and oil. So it looks at the inflation-adjusted gold and oil prices relative to their 12-month averages. Now, I've used the average of these two, and what I've found is when they top 22%, we've always seen severe periods of economic turmoil going back to the start of the fiat currency era.
According to Tom, the signal was triggered around 1974, 1979, and 2008. While past isn't necessarily prologue, he's concerned about what's next.
The most significant thing about this indicator is that gold and oil are rising together. And that shows, gold rising shows that investors are pricing in financial and economic risk, and oil rising shows that investors are pricing in geopolitical risk. And when you have three of these issues existing simultaneously, it definitely shows that you've got, a lot of problems potentially on the horizon. And that's why this indicator has obviously been so effective in the past. And it's definitely an area to monitor moving forward.
I'll leave the links to the interviews with John and Tom in the video description. Definitely check them out for their full insights on the topics mentioned and more. Coming up next week, the U.S. Federal Reserve will meet for the third time in 2026. CME Group's FedWatch tool shows that the central bank is widely expected to hold interest rates steady at 3.5 to 3.75%. Its last reduction came this past December, and since then, inflation concerns caused by the Iran war have thrown future cuts into question. If all goes as planned, next week's Fed meeting will be the last for Chair Jerome Powell, whose term ends on May 15th. However, it's possible he may remain in the position longer. Powell has said he will stay on temporarily if nominee Kevin Warsh isn't confirmed by that time. Warsh's confirmation hearing took place this week and brought questions about Fed independence, a key concern given US President Donald Trump's clashes with Powell over rates and comments showing he believes Warsh will be more likely to do his bidding. Interestingly, it's Trump's feud with Powell that could end up extending his stay at the Fed. Republican Senator Tom Tillis, who's part of the Senate Banking Committee, has said he won't vote for Warsh until Trump drops a Department of Justice investigation into Powell. We'll talk more next week about the Fed meeting and how this situation develops. Agnico Eagle Mines announced a slew of deals this week in a bid to consolidate Finland's central Lapland greenstone belt. The major miner plans to acquire Rupert Resources and Orion Resources, as well as B2Gold's 70% stake in Fingold Ventures. Because Orion owns the other 30% of Fingold, Agnico will end up wholly owning that company as well. The resulting land package will cover almost 2,500 square kilometers, and Agnico executives say it could become a gold production hub capable of producing 500,000 ounces annually within the next decade. Synergies are estimated at $500 million.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.